Accrued expenses are costs that have been incurred. What that means is that the company has already received the product or service or the benefit that goes along with the expense, but the expense has not yet been paid. So that means that the company has received something, but not yet paid for it. And that's why they are liabilities, because they now have the responsibility to pay for this. So some examples of this, my favorite example is employee wages. Because as employees come to work and, they work 8 hours a day for 40 hours a week, really the company is incurring the liability, the need to pay these people for hours that they've worked. So each day they are incurring more and more expense that they have to pay to their employees at the end of the pay period. So that is recorded as wages payable until the salary is officially paid in cash to the employee. Another example would be if the company purchases goods but will pay for them later. That's going to be recorded as accounts payable. And then similarly, if the company receives services but will pay for them later, also recorded as accounts payable. So accrued expenses are liabilities. The biggest example of an accrued expense is accounts payable, but for the most part, they will always end in payable. So accrued expenses are payables. Another example is an electrician fixes an electrical problem for the company in March, but the company won't pay for it until April. And in reality, this happens a lot. This can even happen, in our personal lives, at our own homes, whatever. Someone comes out and works on something, fixes something, and then they end up sending us an invoice for that later. So we will have received the service, but have not yet paid for it. But we know that we're going to have to. So we record that as a liability, showing that we have to pay that in the future. So this adjustment has to be done on the books at the end of the period, just because we know that this payment is coming up in the future. So at the end of the period, you take a look at what expenses you've incurred but not yet paid. And so here, with the example of the electrician, you would take a look at the month, see that you have incurred an electrician expense but not yet paid it. So you can debit the expense, electrician expense, and we'll just say it was for $200. And typically what we've looked at in the past couple of chapters is that when you record an expense, then you credit cash because you're paying cash for the expense. But that's not the case here yet. You have received the service, but you haven't paid any cash out. You know you'll have to next month. So in order to record this properly, you have to record it as accounts payable. And that's just showing that there's a liability, there is something you owe. You owe the electrician $200. So that's the actual adjusting entry. However, to take it one step further, this is the journal entry that you would make when you do actually make the payment for that invoice. So you would debit accounts payable because that reduces the balance of accounts payable, and you would credit cash to show the $200 payment. Here's another example using salaries expense. Remember, as your employees come into work, each day you owe them more and more salary until it's paid. So Fast Forward's employee earns $70 per day, Monday through Friday. Record the accrued expense for the salary earned on December 29th through 30th. So essentially here what we're looking at is Fast Forward has a 2-week pay period. So you can see here the pay period starts on the 1st and the 15th. So the 1st, and then we go here, get almost to the end of that week, they have a payday. And then the same goes here. We have a payday or a pay period, then a payday. So then at the end of the month, it looks like the employee has worked for 3 days, but it's the end of the month. So we need to adjust for things that have happened during the month that haven't been paid yet. So this is 3 days of work at $70 per day. So that's a total of $210 that will need to be accrued as of the end of the month. So we will record this for December 31st. We have to record an expense, so we'll call it salaries expense. That's $210. And remember, accrued expenses are payables. So we will record salaries payable of $210.